guys. Hey guys. Good evening again. Welcome to another episode of Market Review. Again, what we're going to do today is talk about a couple of things, right? As of right now, we're going to review the SPY. We're going to talk about what the market actually needs for us to get a bit of a rally toward the end of the year, what we typically call the Santa Claus rally. We'll talk about what's upcoming as far as the data that we have upcoming as well. So we'll look at all of that, right? Today was a tough day. There's no sugarcoating that. It was a tough day for everyone in the market. We had a total collapse. Once again, that actually that the cause of that was the AI trade. That's the excuse. There's always an excuse, right? Is that really the reason why something like that happens? That's what they say, right? And what we're seeing lately has been the exact same thing, it's the exact same pattern. When you look at the pattern, we typically float up on the overnight market, and whoever needs to get in position, those guys get in positions. And once the market open, and we tell traders try to jump in to take advantage of maybe of a rally, and then they drop things on top of us. That's literally what's been happening. This is why today actually I could have made a sizable amount of money if I took the trade on the open range workout. Unfortunately, this is what I keep telling everyone. Um, the trade setup was not there for me. I mean, I did see with the possible breakdown, and I see it happen. I'm watching it on the SPY, and it break the level. However, when I have my little list that I have to check off, it just never really checked off for me. So because of that, I decided not to take a trade. I stayed on the sideline, and I can tell you based on where the market. I mean, that was like what if I took that trade from where we had the actual breakout, that could have been maybe what a 10, 12 points drop, which would have been nice for the day. But anyway, guys, if you're here, remember to smash the like button. I do appreciate you guys being here. I know it was a tough day, so for you to still be here and being able to still get involved and not say, you know what, forget it. I don't even want to think about the stock market right now. The fact that you are still here, but we have to, right? We have to. On those days, on those tough days, sometimes these are the best time to actually show up because these are when you're going to get your best opportunities. All right. As we talking about that, let's see. Tomorrow's gonna be a really strong day. First, just to start, I believe yesterday I talked to you guys about Micron, ticker symbol MU. Micron was reporting yesterday. I mean, this afternoon they reported and they crushed it, which is good. This might actually help the AI stocks with a rebound, and I hope it does. Right? I mean, the conditions are actually prime for that to happen because right now you have Nvidia's that support level. Micron was at a trend line. Broadcom just hit a support level today. Today, the SPY just hit a support level. It almost seems like there's a lot of things aligning perfectly for us to possibly get that rally toward the end of the year. However, there are a couple of things you're going to need. All right. So if I could show you guys right here, let me just zoom in so everyone can clearly see what I'm looking at. Okay. So if I zoom in, we're going to Thursday. So tomorrow, the first thing we're going to get is the jobless claim. Then after that, we're also going to have consumer pricing index. We go also going to have core CPI year over year, and then we also going to have the Philadelphia Fed manufacturing survey. So that's a lot of data that can really shake the market. And based on where the market is right now, we're going to see that once I pull up the chart on the SPY, you're going to see exactly where we are. It's I mean it's at a strong support level, and if we break below that support level, we're in trouble. But it also set up a great opportunity for a nice bounce. Because right now I think next week we have the holidays, so I think it's is it Wednesday? That's Christmas Eve. So that's I believe the market is closed or we have a short day. One of the other. So these are the kind of time that we have a lot of institutions. You start having like stockbrokers and investment bankers going on vacation, taking some time off. So most likely, what you're going to see next week is a lower volume, right? Volume is going to be lower because a lot of time you see what those guys do. They either get out of positions or they put on hedges, which typically, and we also just had VIX expiration, right? So VIX expiration typically makes the market very volatile. It could drop it a lot. It could, if we get a squeeze, if we're bullish, we typically get a nice squeeze. So what happens? Those guys go away. They're not trading the market. Most of the people that will be trading will be retail traders, and the conditions are set for us to really get a bounce. What I mean by that is retail traders tend to be more bullish anyway. Retail traders likes to buy the dips, and right now we just had a nice dip in the Qs, specifically with the tech stocks. That's a nice dip. You're talking about Broadcom, you're talking about Nvidia, you name it. Almost every, besides I guess Tesla is still tech because of robotics and things like that. Besides Tesla, all these companies right now are struggling and they're not moving very much. And on, I believe on Friday, we have existing home sales and consumer sentiment. That's not really that market moving, but uh, this is inflation data, folks. This is inflation data, and I think when you couple that with jobless claims, that's going to make a big deal. It's unfortunate to say that, but that's the truth. Okay, I'm not gonna lie to you guys. We actually need the jobless claim numbers to be terrible, okay? Because it seems like we've been having a bit of an uptick on the inflation data. So if the jobless claims remains intact, right? If that's staying stable and inflation is rising, guess what? Next year, 2026, we might not get any rate cut, and I don't think the market has priced in no rate cuts for next year. That's not something that's priced in yet. I understand the administration wants to cut rate. They want to put somebody in there who wants to cut rate and whatnot. But you guys have to remember, there's a vote. No one person decide this is what's going to happen. They actually take a vote. All right, that's the way that happens. That being said, let's go again. We're going to dig in the charts. Let's see exactly where we are and what happened. Okay, this is the daily. You guys can see that right there. What did I say? Beginning of the day, just watch and see if we float up a little bit. Try to go and test that. Let me just turn off those these things just so makes it a lot easier for everyone to see. There you go. Let me just get the candle, right? So we float up a little bit, went and test that, but guess what? What do we have right here, right? That right there, we had we have a resistance zone right here, right? Remember when we were doing this, I was talking about that when we were doing this initially. So we did that, and then at some point we came here, we just stayed right in there for a little bit, and then we broke out of it. I mean, that is a big red candle. I mean, you're looking at that, but this is the support level. This is the support I'm talking about, right? Um, we haven't closed below the zone, the support zone. I mean, that could go slightly lower, so we've not completely closed below the support zone yet, but we are inside that zone. So with Micron reporting and doing well and overnight right now, although lately that doesn't seem to mean much, but the overnight market seems to be looking okay so far. Let's put it that way. So we might actually, if we pop back up, we might actually go test that. But then all everything hinge on this data coming out tomorrow. the tomorrow's data means so much for the market. It means so much. Again, where I'm leaning toward we might get a bounce. But remember when we did this, right? When we came to this level, I was very confident. I told you guys I think we're gonna see a bounce, and I bought QQQ puts. But I did say when you go in, you go in, you don't stay long. You go in, get green, get out, right? So on this day, we floated down here, then we had that bounce. I got out right here. I got out. I didn't stay in. I got out. All right. I did not feel confident enough to take that one, right? So I did not take it. I did not take it. So right now, again, today I did not buy any calls today. Why? Because we didn't come and bounce and do a bottoming wick, right? If we had a wick, right on here, like we came down, even if down here and we bounce up, just like we did right here, I would have felt comfortable to say, hey, I'm going to get something. But right now, I have to let you guys know I did not get it. I did not get a trade like a swing trade on this. I did not do that because the chart did not tell me we were primed for something like that. However, do I think we might have a bounce? Because there was a couple of things that you cannot. That's not really trading, right? That's the way I looked at it. Um, what I mean by that's not really trading because we were hoping Micron reported well, right? Can't control that. That's not in the chart, right? Can't control that. That's a 50-50. That's gambling. I don't do that. Then we also have to have good data tomorrow morning. I can't control that. I don't know. I wish I did. If I knew, trust me, I'll find a way to let you guys know, right? But unfortunately, I do not know. Therefore, I felt like, okay, you know what? I'll stay off the sideline, and tomorrow morning, if the opportunity shows itself, I'll take a trade intraday, and if we have a nice green candle showing me that hey, we possibly might pull up for end of year, then at that point I could take something. Okay, so now here's the thing, right? I know it's painful, guys, and I've been talking about this. I have been talking about it. What exactly? Again, on a macro level, we have not canceled out that move yet. On a macro level, this move have not yet been canceled. What we're still looking at right now, I know it's painful, it's taking a long time. I mean, look at this chart, gapping everywhere, big red candles, and all kind of stuff. If we're still looking at that, again, this is the left shoulder, this is the right shoulder. And again, this right here is our head right there. We still have that. Actually, this is the pattern. I mean, I would have preferred it just make the shoulder like right up there. Just leave. You could have stayed higher, but it didn't, right? Actually, okay. There you go. I just realized I did not switch over the screen. Okay, so there you go. See, it's right there. You guys can see it. This is the left shoulder is right here, and the right shoulder is right there, and this is the head. So far, as bad as the market has been, this current macro level pattern is still intact, right? Now, if we break below this level, then we're done. If we break below this level, then we're done. All right. Then I'll show you guys one more thing. This is what I'm talking about. When I'm talking about, it seems like we having a lot of different sort of like signals telling us, hey, you know what? We might want to float. The conditions are okay and things like that. So if we go, if let's say our whatever this chart, right? Let's zoom out to see exactly where we are. And if we go and take the Liberation Day lows connected to that low as a trend line, right? Now let's zoom in and see what we did or what we're doing exactly, right? Okay, that would have to be get connected better. Yep, if we do that, what we're looking at exactly Is us tagging that trend line from Liberation Day. Literally what we're doing. We are tagging that trend line from Liberation Day. This is what we're looking at right now. So we while it the chart, I mean, if you're looking at it on the, if you're just looking at it straight up, right? You can say, hey, you know what? We're not looking very good. And yes, there's a case to make for that. There's a case. Again, I will give you both sides. I don't just give you one side, and because nothing's absolute, right? All I'm talking about is, hey, this is what might happen. Once if you're trading it, you have to wait for the signal. Okay, wait for the signal and see what happens. Then you can take your trade. Um, right here, we have a lower high, so we have a bearish divergence on the MACD, right? Bearish divergence on the MACD. However, even though the MACD is making a lower high, right now we're not. If you're looking at this low, we're not lower than this low right now, right? So it looks like that we can easily curl back up tomorrow. If we do have good data, we can curl back up tomorrow, which would give us what? A bullish divergence. All right, that's what we're looking at. So know your candlestick pattern. We are currently at a trend line, meaning strong support level horizontally, because you can see this right here, this level. This level was brutal. We took a beating from this level and we just came back right now. That range. We just came back right on top of that range again. So we have horizontal support and we have a trend line dynamic support right there. So depending on what we get tomorrow, based as far as which candle we get tomorrow, hopefully we got up and we won. That would be great. If not, we're hoping to get a nice little bit of a bullish arami. Have a nice little bullish RME right there so we can push up. If you don't know what a bullish RME is, we're going to go to the Google machine, guys. There you go. Let's go take a look and see bullish Harami candlestick pattern, images. What exactly is a bullish Harami? This is what a bullish Harami is right there. So we have this big red candle and you would need a candle that's inside of this candle, but it must at least cover 50%. It must close above 50% of the previous candle. Okay, it must close at least 50% above at least 50% of the previous candle, that red candle that we have. So if we're looking at this red candle right in there, so I would say tomorrow, if we get a green candle tomorrow, what would make me feel real good is that candle must close above that, right? Whether we gap to that level, right? Whether we gap up to that level, or maybe we open here or there, and then we push up to give us a big green bullish candle. Whichever way, we need a green candle that close above that 675 level. That's on the SPY. This is what we're looking at right now. And if we go in, let me see. On the 30 minutes, I believe I talked to you guys about that on the 30 minutes yesterday. Again, if you do the exact same thing, that's the trend line I was talking about, right? There you go. That's the trend line I was talking about. Remember yesterday when I said we fell, and this is the trend line where we fell pretty much, yada yada, so everyone can see it. Let me zoom in. So this is what we did. We went in. That was right toward the end of the day yesterday. We did that, and then we in the overnight market we gapped up. We gapped up, and what do you see here? This is what I don't like. I really don't like seeing this. When you have so many topping tail, so many wicks up there, that's institution offloaded. That's these guys are selling. So they already had that push and they just taking their money, they just taking their money out. They took their money out, it came here, and then that happened. Right? That's what happened. So if you look at it on the daily, Actually, not gonna show very well on the daily, but if you go on the in the 4 hour, you'll see that was more like a rejection. It just rejected. It went to strong resistance level and rejected. And again, I did say it looks like we are building a bear flag. I don't know if anybody remember that. I said it seems like we are building a bear flag, and that's exactly what played out. We had a bear flag pattern set up, and then we push right back down. So all that happens. As of right now, it seems like we have a little bit of a consolidation zone that's happening right on top of that trend line I just draw. Can you guys see that? This is the great thing. This is what I like about technical analysis, and that's why I'm so passionate about this. Look at that, right? All these drop. It literally just came right to the trend line, bounced, and so far the trend line is holding. Trend lines. I know a lot of people don't like using trend lines because trend lines is something that's I would say it's a bit subjective in a way, but while it is subjective, it is something that can make or break your trading if you are using trend line. But trend line is one of those things that I have relied on for a long time, and I love you. I mean, I saw such a big change in my trading when I really started trusting my, not like you. Always been using trend lines, but really trusting it, like blindly trusting trend lines. Yeah, I've lost a couple of trades, but I cannot tell you how many trades I've won just by just by utilizing my trend lines, or getting out at the downward trend line, right? Because look at that. When I said, hey, I saw this and that I saw this that day I saw that and I got out, when that saved me, right? That's the way I use trend line. Now let's take a look at the Qs. The Qs took a beating, man. The Qs took a beating. It's been brutal, but that's literally the way that works. That's exactly the way that works. The Qs is telling us, hey, again, look at the Qs. Look at that. If you have that trend line, the Qs came right to the trend line. The only problem that I have with the Qs, well, not the only. I have a few problems with the Qs, right? If you're looking at the Qs, we have a high, we have a lower high. Although we're sitting at the trend line, but we just broke that strong support level. Like we just broke that. Like we did yeah, we sort of just did a 3 bar play right here, red. And if you're not familiar with a 3 bar play, okay, 3 bar play candlestick pattern. This is what a 3 bar play is. Big red candle, small green candle, big red candle. All right? This is the bearish 3 bar play. Okay? Sometimes it ends up being a 4 bar play, right? Sometimes it does that. It will give you a 4 bar play sometimes, but that's what it is. So when you trade that, right? So this is your trigger for entry. Below that candle, that's your trigger for entry. So had you got in right here, I'll say like 6 or 7, you could have cut this entire trade down to 600. All right, you could have cut this entire trade down. I didn't get it. I'll be honest with you guys. I didn't get it because again, it did not meet my trading standard, my trading plan. It did not meet it. Um, so that's what we have coming tomorrow. I want to talk to you guys directly again. I'm going to start doing this every single live now. Be honest with yourself with your trading plan, right? Your trading plan cannot be in your head. Your trading plan needs to be written down. If you have to laminate it, have it next to you. Do that. Have it somewhere. Or before the day starts, take a piece of paper, right? Take a piece of paper before the day start and just write all the checks that your a trade needs to meet, all the requirements, so you can check them off. Before you take a trade, you must force yourself to go and check off all these different things, right? My trading plan entails four different things in it, right? It's four different things, and if I get three, I'll say that's a good setup. It's not an A setup, but that's a B setup. If I get three, I can check three things on my list. If I get four, that's an A setup. I'll go a little heavier on that trade because I feel confident. I feel good about it. If I get two, which is a C setup, I'm not going in. I'm not going in. So the minimum checks I need to get on that is four. All right. That's the way I trade. So I implore you guys. I really implore you guys to do that. Just really be honest with yourself. Have your trading plan, and you cannot come to the market and trade a different thing every single day. Have a specific plan for your swing trade, because swing trade is different than day trading, and have something else for your day trade, right? Your day trading, this is the criteria that needs to be met for me to take a trade. And my swing trade, this is something that needs to be met for me to take a trade. Now, I'm not saying by doing that, you're guaranteed to be successful, right? There's a reason 90% of the traders, 80, 85 to 90% of traders lose money, right? But the likelihood of you being successful is a lot higher. And then what that also do for you is if you practice proper money management or account management, risk management, right? If you practice that well, right? And we all fall short sometimes, and I get it, especially if you're doing contracts. Sometimes you wake up and something, maybe they did an offering and the stock gap down. You don't have time to get out. You don't have time to do anything. But if you really have the chance to really properly manage your stuff, what you're going to realize is like, okay, I have been using that specific trading plan for the past 2 weeks, and it's not working. So that means I have to go back to the drawing board. I need to do something different. Now you know that specific trading plan does not work. That's the main thing, right? Until you find the one that works the best for the market. And guess what? Every trading plan gets blown up at some point in the market because the market condition change and it doesn't fit your trading plan anymore. Or what you can just do is say, okay, you know what? I'm just gonna stay on the sideline because they just not meeting my plan. I mean, it's not because there's not any trade setup. It just those trade setup does not align with your current plan. Just like today, I did not take a trade because the trade setup did not align with my plan. But was there a trade to be taken there? Yes, there was. There was absolutely a trade to be taken. It's just that it did not align with my with my trading plan. So again, this is what I'm gonna leave you guys with. Again, I know for the past 3 to 5 minutes I've been talking about it. This is something that I'm passionate about. It's something that you really, really need. If you're going to trade, have a trading plan, follow the trading plan, have a checklist in front of you, make sure you check off all the things that the criteria that need to be met in your trading plan for every single trade. No exception. Do that for 2 weeks. Then when you're done, review your profit and losses for the past 2 weeks and see how you did. As long as you actually followed them, right? From execution to trade management. So there's two different things. Taking a trade is one thing, and trade management is something else. All right, guys. Well, thank you for tuning in again, guys. This was another episode. Hopefully, tomorrow we get that float up. The numbers come out. The data is good. If the data is good, we're going to float up. If the data is bad, we might have a really painful day tomorrow. So be ready for it. If you day trade, none of that none of that concerns you. So whatever the market shows, take advantage of it. Don't have any preconceived notion this is what's going to happen. So I'm most forced to try to look for a trade on the upside or the downside. Just make sure you keep looking at, hey, what exactly is going to happen here. And again, if we pop up, don't be surprised if we dip down a little bit to check the low of yesterday or to check the high of today, the low of today or the high of today. So make sure you mark those levels on your chart as you start your day. All right, guys. Anybody that's part of the community, again, I will see you guys on the Teams live. I will be transitioning over right now. If you tune in, I appreciate you. Smash the like button. As usual, make sure you guys share the channel as we continue to grow. I'm pushing to try to get to about 3,000 subscribers toward the end of the year. That's very aggressive, but we can dream, right? You shoot for the sky. If I miss it, that's okay. We'll still do well. All right, guys. Take care. Oh, one thing I forgot to mention in the video because I must do I must do that. Everything I just said to you guys, this is for educational purposes only. Make sure you do your own research. Trading can carry a lot of risk, including loss of capital. So make sure you study, you do your own due diligence, you do your own research. Nothing I say to you guys is any suggestions for you to buy, hold, or sell. So be careful out there. Anyway, guys, I have to run because I have the members waiting for me. So tomorrow, go in, get green, get out. This is not currently a market where you stay in for a long time, because just like you can see the profit, you'll see that thing evaporate in a minute. If you look at the candles, see the drops. Drops were crazy today. All right, guys, take care. It's been fun, and everybody have a good night. I'll see you guys tomorrow.